Welcome to this explainer. Today, we're diving straight into the exact mechanics of how you can build real, tangible wealth by understanding what I like to call the invisible machine, the one that actually dictates your paycheck. We're going to unpack the absolute magic of the 401k, and you'll see how mastering this single tool fundamentally shifts your entire financial trajectory. Let's get right into it.
So, let me ask you, do you actually know how much money you make? I know it sounds kind of like a trick question or maybe a bit overly dramatic, but I promise you, the number sitting there on your offer letter, it's a total illusion. It's hiding a massive, expensive reality. It's really just a starting point, the sticker price before the actual transaction even happens.
All right, to really see this in action, let's look at a tale of two coworkers. We'll call them Mark and Adam. So they sit, two rows apart at the exact same company, they have the exact same job title, and identically matched salaries on paper. If you stopped either of them in the hall and asked what they make, they'd both confidently spit out the exact same number without even thinking. But as you'll see, their financial realities couldn't be more different by the time April rolls around. One of them understands how the machine works, and the other, well, he just crosses his fingers and hopes it all works out.
Here's the deal. They both think they make 90 grand a year. But gross income is just the catchy headline. Your net income, meaning what actually lands in your checking account and is yours to spend, save, or invest, that is the real story. And the gap between that gross and net isn't just one vague, mysterious chunk the government takes out. No, it's a very specific, carefully calculated stack of hidden deductions.
First up in that stack is a hidden tax they both pay called FICA. Before federal income tax is even a thought, 7.65% of that 90 grand comes right off the top to fund Social Security and Medicare. That's practically 7 grand, just gone. But wait, here is the really crazy part. Your employer actually pays a completely hidden matching fee of 7.65% on your labor, and you never even see it on your pay stub. Any economist will tell you that money would have been part of your wages. So if you really think about it, the true tax on your labor right out of the gate is closer to 15.3%.
Now, this brings us to a massive, terribly expensive myth that literally scares people away from making more money. You have absolutely heard someone say this. Oh man, I don't want that raise. It's going to bump me into the next tax bracket and I'll actually take home less money. Listen to me. This is mathematically impossible and it costs people real, life-changing opportunities.
To understand why that's a total myth, we have to look at how the U.S. federal tax system actually works. It uses progressive marginal brackets. Think of your income being poured into a series of glasses stacked from shortest to tallest. So the first glass fills up and that money is taxed gently at 10%. When it overflows into the second glass, only that overflow is taxed at 12%. The older money sitting in the 10 and 12% glasses never gets retaxed just because your newest dollars overflow into the 22% glass. Your raise can literally never make your total take-home pay go down, period.
So the absolutely crucial thing here is just knowing the vocabulary. Your marginal rate is just your top bucket. It's the tax rate on your very next dollar. But your effective rate, that's the actual blended average percentage you truly pay across everything. When someone making 90 grand says they are in the 22% bracket, they're panicking because they think they're paying 22% on all their money. Actually, scratch that. They aren't even close to that.
Let's run the actual numbers for Mark. So, Mark makes $90,000 and does what most people do, which is absolutely nothing. He just takes a standard $14,600 deduction, dropping his taxable income down to about $75,400. If we pour that through our little glasses, he pays roughly $11,640 in federal tax. If you divide that tax bill by his gross salary, his effective rate is a mere 13%. Yep, 13%. Nowhere near that big, scary 22% bracket he constantly complains about at the water cooler.
But wait, we also can't forget state taxes, which basically act as a massive geography tax. Check this out. Two people earning the exact same $90,000, doing the exact same work, can have their take-home pay separated by $5,000 or even $6,000 purely based on whether they live in a state like Texas, which has zero income tax, or California, which takes a, let's say, rather enthusiastic slice. The takeaway? You always have to compare job offers net to net, not gross to gross.
Okay, here is where Adam enters the picture, and where the math completely changes. Adam knows the tax code isn't just some mysterious force that randomly happens to you every April. No, it's a system of deliberate levers written into law that responds to you. Now, let's be clear. There is a huge difference between tax evasion, which is illegal lying, and tax avoidance, which is legally using the rules exactly as written to keep your own money.
Adam does the simplest, most powerful thing first to master his real income. He pulls the 401k lever. Let's say he contributes $12,000 of his own money into his 401k. That money comes out of his income pre-tax, meaning he moves it out of sight before the government is even allowed to run its calculations. This right here is the magic of the 401k.
When we compare their paychecks, we see this magic perfectly at work. By sheltering that $12,000, Adam's taxable income drops down to $63,400. And think about where that $12,000 came from. It would have been sitting right at the very top of his stack, splashing around in his most expensive 22% bucket. By moving it into the 401k, Adam literally scooped water out of his highest tax glass. That single simple move cuts his federal tax bill by $2,640. The government effectively just chipped in over $2.5 grand to help Adam build his own retirement. Insane, right? This is hands down the deepest insight of this entire explainer. So let's slow down and really lock this in. Deductions save you money at your highest marginal rate, not your average effective rate. Sheltering $1 in that 22% bracket is literally worth 22 cents back in your pocket. This is exactly why the tax code heavily rewards people who learn to pull its levers. The higher you climb in income, the more incredibly valuable every single deduction becomes.
But Adam is smart, and he doesn't just stop at the 401k. He supercharges his wealth by pulling another lever, a health savings account, or HSA. Mathematically speaking, the HSA is the single best vehicle in the entire American tax code. Why? Because it is uniquely triple tax-free. Most accounts make you choose between a tax break going in or coming out. The HSA, it gives you both, plus tax-free growth the whole time it sits there. It's a total game changer.
Look at this incredible final result from the exact same $90,000 paycheck. Because Adam utilized the magic of his 401k and his HSA, his taxable income just plummeted. He built a $16,000 asset snowball for his future, and as a direct reward for doing that, his tax bill shrank by almost $3,800 compared to Mark. Mark is stuck on a treadmill telling himself he just can't afford to save. But Adam knows that saving is exactly what makes the tax bill shrink in the first place. Zooming out for a second, this whole comparison reveals the true architecture of American wealth. Money earned from trading your hours for dollars, your labor, or ordinary income, is taxed at the highest rates possible, up to 37% plus FICA. But money earned from ownership and investing, like long-term capital gains, is taxed far more gently, topping out at just 20%. Making your money work for you isn't just some cheesy motivational quote, it's a literal description of a highly favorable tax category.
So what does this all mean for you? Well, you can take these 5 exact actions today to completely change your financial game. First, stop treating taxes as a mystery and find out your real effective rate. Second, identify your marginal top bucket so you know exactly what your deductions are worth. Third, never, ever walk past a free 401k employer match. It's an instant 100% return on your money. Fourth, check if you qualify to use an HSA. And finally, always compare new job offers by what you actually take home net to net.
I'll leave you with this final thought. Master the levers of the machine. Truly understand the magic of your 401k, and you will quietly out-earn people who make far more on paper than you do for the rest of your life. The offer letter is not your income. What you keep is your income. So, are you going to let the machine run you, or are you going to learn to run the machine?